Hello traders, Gary Wagner here. Just about 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 21st day of May, 2021, and this is the daily report for gold and silver, our weekend review, and this was a pivotal week in gold. There is no doubt about it, with it breaking above the 200-day moving average on Monday and then to higher ground throughout the week. Although it closed in essence unchanged today, it did have a strong gain on the week, closing very close to 1890. We will discuss our particular targets on that, as well as copper's recent drawdown on today's show, which begins now. Although gold closed in essence unchanged today and is currently fixed at $1,881.80, it did make strong gains for the week, as you'll see when we pull up our charts. There is no doubt this was a key and pivotal week for gold because it broke above a former level of resistance and closed solidly above that. If you take a look at these tops that came in last week, they come in roughly at 1845. However, that all changed on Monday when we saw the market open just at the highs of last week. That's right here, 1845, break above the 200-day simple moving average and close solidly higher above 1860. From there, it made some more headroom, going up to 91 on two occasions during the week. That includes today as well as on Wednesday, and closed solidly higher on the week. Another interesting outcome is the study that we have between the 50 and 100-day exponential moving averages, which appear as though a cross is imminent. Now, the exponential weights recent data more heavily than former data, and when we're looking at averages such as the 150-day, of course, they're going to lag tremendously behind the actual price movement in gold. So to better reflect that, we did this study with the exponential moving averages. The 200-day, we are still using a simple moving average. I have added the horizontal line, which references the highs achieved this week. They come in, as I said, at approximately 1891. We can see that the last time gold traded at this level was during this tremendous fall in pricing that occurred right at the second week of January of this year. So we are certainly headed into uncharted territory. I think that 1900 is very achievable as soon as next week. And as I said, our upside target could be as high as 1947 to 1960. And of course, the higher number is referencing these two tops that came in, one at the beginning of 2021, and this that came in during November of last year. And traders, a simple area chart definitely defines a long-term view. It identifies the double bottom that occurred in March, as well as this recent move to higher pricing. While we have had some dips during this rise, we've had solid price gains now since the end of March. My recommendation is to maintain your current long position at 1851 and to maintain your current stop. Although copper did decline on the day, the amount of the decline is much less than what we witnessed yesterday, and I believe that we're sitting right at a current level of support based upon these lows. Of course, we'll talk about that in detail when we pull up our charts and technical studies. Copper has certainly been under pressure this week, and after hitting a new all-time record high, that occurred a couple of weeks ago when market forces took copper pricing to approximately $4.87 here. We are currently tracking lower on the day, $4.51 if we round it up. I've got our really critical level of support at 445. We have our stop at 439.6, And I am looking at this as a longer term trade. I believe as long as this particular level holds, that's these recent lows here, we should avoid being stopped out of our trade. We'll have to see how copper trading unfolds next week. Maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.